Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to share a couple of ideas that I'm looking at as we head into next week. In last night's free video I covered NVDA and a lot of the trades that we had taken into the report, the trade for the report itself, and as the day comes to settle you can see that the idea of the short 260 straddle was pretty much in line. There was a $15 move expected based off the implied volatility of the options, and at the end of the day we ended up having a $5.60 move. So when you can initiate those strategies, get the move that is smaller than the expectation, that's where the best money can really come in, especially for premium sellers. Now, one idea I'm working with here, and I'll have to see how it opens up on Monday, but one thing that I would like to see is that if we trade down somewhere around 250, I think that will be an area to apply the exact same strategy. Not because, and of course earnings aren't going to come up for another quarter, but using the same idea, which is to say, maybe the stock has run a little bit too far, but at the same time, I think a pretty decent report could keep it chopping around 250. You could apply the same idea at 255, but I prefer to do it at bigger psychological areas. So if I was going to apply that idea right now, what I am basically suggesting is that throughout the course of next week, NVIDIA can trade, and this is by Friday's close, but trade within an $8.60 range. So depending on where it opens, like I said, I would prefer to put it around 250. But if you can stay within your given point range, whatever credit you take in on the short straddle, then that's another good way to take in some premium. If you don't like the short straddle, all you have to do is come in and buy some protection. Either, I think, $10 or $15 wide is appropriate in NVIDIA, and then you could look for a nice theta positive trade to take you into the end of the week. Amazon is another place where I'm going to look at exactly the same thing. And one thing that I like about these trades too is that if they don't end up coming through, they still usually offer a very good risk reward. So I look at this and think Amazon is no stranger to 1600. It has spent some time bouncing around in this area, and in the same way, if on Monday we're trading right here in this zone, the idea that we open somewhere around 1600 on Monday and then close somewhere close to 1600 on Friday is what I would like to work with. Now in Amazon you have a much bigger expected move, so you have to widen out the strategy to give yourself a better probability of success. But if I look at doing this $30 wide, you can see that you're basically risking $1,000 to try and make $2,000, and the way that you benefit off of this trade is if Amazon can have some indecision around that key psychological area of 1600. Also, with these strategies, you don't have to have them pin. If you can sell it at 20 and buy it back at 15, that's a trade. Then if you want to try and get maybe a little bit cute with a few remaining pieces of the spread and hold it all the way into Friday, then those can be very rewarding trades when they work out, and especially when you've paid for them with previous spreads. So, I hope that helps, gives you a couple of range-bound ways to think about trading during monthly expiration, and we'll recap those as we get into next week's trade.